Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news the prospects for a rebound in global growth aren't obvious to a key global analyst. But first today, it is an American public holiday, Martin Luther King Day, and markets are closed there. Now, the IMF said overnight that the fall in global growth appears to have bottomed out, but there is no rebound in sight. They cite risks ranging from trade tensions to climate shocks that they say makes the outlook uncertain. They are recording that American GDP growth dropped 0.6% in 2019 and China's fell 0.5%, all due to the trade wars. Of course, the dollar fall was much larger for the US given their much larger economy. They see the American growth rate falling to another 0.5% until 2021 and China slipping another 0.3%. The only big improvers from here seem to be emerging market economies, and especially Mexico after a very weak 2019. Globally, 2020 won't see any significant rebound. Neither New Zealand or Australia rate a mention in this review. Overnight, European equity markets were all lower by about 0.3%, with the exception being Frankfurt, which managed a 0.2% gain. Yesterday, Shanghai equities rose 0.7%, Tokyo rose 0.2%, but Hong Kong tumbled by almost 0.9%. Moody's cut Hong Kong's credit rating from AA2 to AA3, citing their inability to resolve the protest issues. And China has confirmed that its new and untreatable SARS-like coronavirus is being transmitted human to human. And while the number of deaths is still low, the number of infected people is rising quickly, with 130 new cases over the weekend. Now, health workers fighting the virus are being infected, and international travel is seeing it spread. Much worse, China is about to embark on its huge annual migration for its Spring Festival New Year holiday, and that raises the stakes immeasurably. In Japan, industrial production is still on the skids, down 8.2% in November from the same month a year ago, but at least it has stopped the decline. In Australia, iron ore prices are heading back up again, now close to $100 a tonne, up more than 15% in the past 3 months. And coking coal prices are on the move back up as well on the steel demand, up 8% since November. The US Treasury 10-year yield is unchanged due to the US holiday at just under 1.83%. Gold is now at $1,561 an ounce. That's up $3 from this time yesterday. US oil prices are a little firmer, now at just $58.80 a barrel, while the Brent benchmark is just on $65.30 a barrel. And the Kiwi dollar is now just on 66 US cents, and while that represents only a minor softness in the past 24 hours, it does mean that it's its lowest point in more than a month. On the cross rates, we're unchanged at 96.1 Australian cents, and against the euro, we're also unchanged at 59.6 euro cents. That puts our TWI at 71.3. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.